guys, what is going on? Welcome back to my Robinhood portfolio. Hope everybody had a fantastic day of trading today. As you can see here, my portfolio ended the day in the red, down 59.71, representing 0.06% of the overall portfolio, with a little bit pullback in after hours trading, $4.40. And you can see here from my graph today, a lot of turbulence within the portfolio. At one point up 450 before pulling back, negative 120. Again, climbing to 440, 450 again before pulling back right before market closed here. And a lot of you are wondering what the volatility is about, and it's because my portfolio is dominated by Portola right now, PTLA. I have quite a bit of capital in this particular stock, and you can see here the overall portfolio is essentially mirroring what Portola is doing. So a lot of you guys were wondering how I made a profit yesterday, even though all three major indices were in the red, and that is why, because my portfolio of, right now at least, is dominated by two stocks, Portola and Ford. And then I have a lot of other stocks as well, but for the most part right now, Portola is definitely dictating what the overall portfolio is doing on a daily basis. Today, what I thought I would talk about is when to sell a stock. This has come up repeatedly in the comment threads, so I thought I would just kind of briefly talk about a couple of different reasons why an investor would sell off a stock. The first set of criteria are more of a market-oriented criteria, and the second criteria are more of tax implication criteria. So there's a lot of tax savings that can be gained at tax time by the length of time a stock is held, both for dividend payments as well as any capital appreciation, any money you've made from buying and selling just from the price of the stock. But there are a number of other reasons why you may want to sell a stock even if you have not held it to get those preferred tax rates. So having said a lot, let's kind of jump into the portfolio with some examples here. A great example is Pfizer. This would be a stock, pharmaceutical stock, in a buy and hold strategy, but a reason to sell this particular stock would be a price target. So when investors initially buy stocks, a lot of investors will put a 10%, 20%, 30% price target on the particular stock. And if the stock meets or exceeds that price target, they will sell off. A lot of times they try to buy undervalued stocks in a contrarian investment strategy, or just an astute investor will identify a stock that other investors may not have identified as a value play. Buy that stock, the stock turns up, you sell off, and typically there's a correction and the stock will fall again, and the investor can pick that stock up again. So very astute investors can do price targets. A little bit more difficult for new investors. And to be quite honest, I don't think I'm that astute to accurately assess a stock, put a price target on, and then simply sell off that stock when the price target is met. I'm more of a buy and hold investor, buying the stock, holding it for the longer term, trying to buy blue chip stocks, large market capitalization stocks, the great dividend yields to hold for a bit longer term. But the reasons I would sell off a stock, and another great example would be TGT Target here. And this is a retail stock, Target. As you guys know, this is a very large retailer within the United States, but it's been having some difficulty. If we take a look at its earnings here, earnings have been down compared to others in its particular market segment. It's got a great dividend yield, but if we take a look at the stock price here, it's fallen 22.83%. In the last 5 years, it's only up 3.76%. Again, with that big drop off here over the last year, 22.83%. And the big reason the stock is falling is that there's been a change in fundamentals. Retail stocks have been cannibalized by Amazon. Amazon is really affecting the whole industry, and Target especially here, 22.83%. But a lot of Target's peers are also down quite a bit. So the reason to sell off the stock would be change in fundamentals. And I only have one share of the stock. If I had more of this particular stock in my portfolio, I definitely would have sold off. Probably a few months ago. You can see it dropped from 57 or so to 50. And if we take a look at the year graph, it's at 1.75 plus dollars and then tailing off here quite dramatically. So change in fundamentals would be a reason to sell off a stock. Target here, TGT, is a perfect example of that. Another reason to sell off capital is for reallocation. I did this actually with Portola. If you guys remember, right before the FDA decision on Portola, I took a bunch of money out of Ford, put it in Portola. I was rewarded by that, by this nice uptick here from the $35 range or so. Actually, let's go 3 months here. You can see this a little bit more clearly here. $38, $36, $40, all the way up to $56. At one point, it was almost to $60. And I allocated some forward day trading and swing trading money to Portola, put it into Portola. I was rewarded because of that. So that's another reason to sell off a stock, shifting capital from one market segment to another if you think there's going to be a good play in one particular stock, one particular market segment, and vice versa. If you think a particular market segment is correcting or will correct in the near term, you can take that capital, put it into another market segment, a different type of stock to protect yourself and kind of hedge your bets, if you will. And another great reason to sell a stock, let me see if I can find this stock. It actually no longer exists. PIP changed into ALT. I'm not sure if I'll be able to find that particular stock. Here we go, Altimmune. So if you guys remember, way back when PIP had a special dividend, essentially over 100% of its share price at the time, that was preceding a merger which formed a new company here, Altimmune ALT. Let's see if we can't see that on the graph here. Yeah, you can see here this company did not exist up until early May here, and you can see it popped up onto the charts here. And this is because there was a merger with PIP. After this merger, the price of the stock skyrocketed, and I went ahead and sold off my new shares. All my PIP shares were converted into ALT shares, and I went ahead and sold off. So that's another reason to sell off a particular company. And another reason to sell off is because the company is essentially going broke here. And we can kind of see this with Sears here. So if I can't find SHLD here, 875. But if we take a look over at the stock price over the last year, it's down 35.8%. And over the last 5 years, down 85.37%. So this would be a definite reason to sell off the stock. As the stock is trending down here, some investors may opt to hold. Contrarian investors may actually get into the stock, but you can see here after it starts this kind of death slide here, you definitely want to get out of the stock. So that'd be another reason to get out of the stock. And then very briefly here to mention the tax consequences of getting out of a stock too early. And again, I put out quite a few videos about tax implication, capital gains, preferred dividends, how to save at tax time, up to 20 to 30% for some investors, depending on what ordinary income tax bracket you fall into. But if you own a stock for less than 1 year, you're going to be taxed at your ordinary capital gains rates, or ordinary income for your capital gains rates. But if you hold the stock for over a year, you get preferred capital gains rates. So if you're in the 15% tax bracket, you essentially are not obligated to pay any tax on any capital gains that you have. If you fall into the 35% tax bracket, for example, you fall back to the 15%. So you can save up to 15-20% depending on which tax bracket you fall into with regards to ordinary income. And dividends as well. It's a little bit more complicated for dividends, but you essentially have to hold the stock for a 60-day period, starting 60 days before the ex-dividend date, and the period also extends another 61 days after that. So there's a 121-day period surrounding the ex-dividend date, and you have to hold that stock for 60 days in that 121-day range. So you can buy the stock essentially 2 months before the ex-dividend date, or if you buy on the ex-dividend date, you have to hold the stock for 2 months thereafter. Again, 60 days before or 61 days after. And the 61 days after is including on the ex-dividend date. Right before the ex-dividend date, that's included in that particular calculation. So it's a bit more complicated, but again, I put out videos on both preferred capital gains as well as reducing the amount of tax owed on dividends. So hope that clears things up. A lot of different reasons why an investor would get out of a stock. Again, target price has been met. There's a change in the underlying fundamentals. You want to reallocate your capital, your money to different market industry or market segment, and or there's a merger and acquisition. The price of the stock typically will bump at that point. You can sell off and maybe buy back a bit later if the price slides back. So a lot of different reasons to sell off the stock with regards to market variables, and then for tax implications as well. You typically want to hold for greater than 1 year before you sell off a stock for preferred capital rates, as well as holding the stock a little bit longer term before or after an ex-dividend to get the preferred dividend rates as well. So I just wanted to quickly go through that. I know that was popping up quite a bit in the comment threads. I hope that cleared up some of the confusion with regards to when a stock should be sold off. If there's any questions about that, leave it in the comment threads down below. And like I said, I'll try to get that to those comments as quickly as I can. And again, if you guys have any comments, anything I said that was incorrect, let me know as well. I'm always open to correcting anything I may have said incorrectly. So yeah, I just wanted to put out a quick video here, and kind of with that, I'll end the video. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. Appreciate all your support with the subscriptions and comments, and really just supporting the channel. Without you guys, this channel would not be possible. So I just want to thank you for all of the great comments and all the subscribers out there, especially new subscribers joining the channel. And if you guys have any good video ideas, any good comments, anything at all, let me know in the comment threads, and I'll put out a video. I'm always looking for new things to read up on. The whole point of this video series is to learn about investing, not only for myself, but for you guys as well. So if there's anything that you guys aren't quite clear about, let me know and I'll do a video about it. So yeah, kind of with that, I'll end the video, and we'll see you guys next time.